Good morning, ladies and gentlemen. Thank you for honoring our invitation and joining us for this virtual press conference where BK Group is going to present financial results for Q2 and the first half of 2023. My name is Audrey and I will be moderating this session. I would like to welcome our media partners to this call and members of BK Executive Management who will take us through the financial performance. On this call, we have BK Group CEO, Beata Habyarimana, Bank of Kigali CEO, Dr. Diane Karusisi, and CFO, Anita Umuhire. After their presentation, we'll also have a Q&A session. If you have questions, you can raise your hand or you can post them in the chat box and I will read them. So without delay, I would like to welcome BK Group CEO, Beata Habyarimana, for her opening remarks.
Thank you, Audrey. Good morning, everyone. We are happy to present today a comprehensive overview of our performance as BK Group for the half year. Before we enter into that, I think I would like to extend my gratitude to the employees, the shareholders and the stakeholders for the particular commitment and the hard work which is allowing us today to celebrate this success. Despite the different challenges we have been seeing on the economic landscape, we are happy to announce that the group showed resilience, showed adaptability, showed commitment to BK Group objectives. We are happy to say that the financial performance, which will be presented by my colleagues in more details, has a substantial growth in all the key metrics. We are happy to announce that for this half of year, the exceptional results of half of the year gave us a profit of 39.6 billion Rwandan francs, with a particular operating profit growth, be it for the bank, but also for the other three subsidiaries of BK Group. BK General Insurance has shown good growth of gross premium of 30% year to year. We have seen the BK Tech House recording sales revenue growth of 27% year to year. And I've also seen the capital increasing its assets under management. Beyond the financial performance, we're also happy to keep sharing with you our commitment to sustainability, to the corporate social responsibility, which remains as a pillar of our corporate culture, and which allow us to have an impact on the society and on the environment. We are happy to see that through those challenges, the great achievements have been recorded, but we also remain vigilant and agile in this uncertain economic environment, but we still so confident we're able to navigate through it successfully. I will give the floor to the CEO of the bank and the CFO, also to give you details and highlights. Thank you.
Thank you very much, Beata. Indeed, it's a day to celebrate the success of the group with these half-year results for 2023. The bank remains an engine for the group, with a profit after tax for the bank at 36 billion, which is a significant growth year on year, over 36% growth year on year. This performance is attributed to two main factors. The first one is a significant increase in our fee income, driven by our FX trading book, also driven for the first half of the year, driven by our documentary operations, trade finance, and also all the fees that we get from our payment facilities. The second factor that is supporting this performance is the quality of our loan portfolio. We have a very low NPL rate at 2.6% and a cost of risk of 2%. This is very good performance, showing discipline in our underwriting processes And we believe if we continue with this trend, we'll be able to meet our targets for the year 2023, allowing shareholders to get a very good return on the equity that is invested in the group. So my colleague Anita, our CFO, will crunch the numbers for you and give you more details on this performance. Thank you.
Thank you, Diane. Good morning, everyone. Just take a few minutes to share our performance highlights with you. So the second quarter of the year added 19 billion to our bottom line, bringing the profit after tax for the first half of the year to 36.9 billion, which is 30.3% higher than the same period previous year. So our strong performance continues to be supported by steady performance in net interest income as well as non-funded income. On net interest income, we've seen a growth year-on-year of 16.7%, which is supported by, on one side, an improved loan yield, but most importantly also a reduced cost of funds, where we've seen our cost of funds continue to decrease in quarter two at 2.9%, down from 3.9% in the first quarter, and this is mainly due to mobilization of lower cost deposits. On net non-funded income, we've seen a growth year-on-year of almost 50%, 47.9%, and this is also mainly due to good performance in our commissions income. Looking at operating expenses, we note that on personnel costs, we are seen a growth of 25.8%, and this is in support of our strategy, where some key recruitments were done, as well as also investment in L&D learning and development activities. On admin and general expenses, there we've seen a growth of 13.4% year-on-year. There's a lot of investment in IT costs as well as the payments business, but it's important to note that overall our operating expenses are growing at a slower rate than our operating income. On net provisions for quarter two, we booked an additional 6 billion, which is in line with what we booked in quarter one, which was a reaction to some accounts that were downgraded, and we continue to provide for them. So that is a high-level analysis of our performance for quarter one that gave us a profit after tax of 36.9 billion. On the balance sheet, our position has grown quarter on quarter, quarter two versus quarter one by 9.5%, mainly funded by growth in our customer deposits to the tune of 105 billion, which represents 11% growth quarter on quarter. On loans and advances, quarter on quarter, we've increased by 3.3%, while most of that, 70%, relates to retail loans. On investment in government securities, there's been a decrease in quarter two, mainly due to some investments that were matured and were not renewed. But you'll also notice our cash balance has reduced, mainly due to investment made, especially with other banks, for earning purposes. Then on ratios, you'll notice that our return on equity has improved. For the first half of the year, we're reporting 23.2%. Mentioned also our cost of funds for the first half of the year, which is now at 2.9%. NPL ratio also improved, 2.3% in quarter two versus 2.6% in quarter one. We are adequately capitalized with a CAR of 23.4% for quarter two. And that is a summary of our performance for the second quarter of the year. Thank you.
Thank you very much. I would like to invite you to ask questions. You can raise your hand, or you can also post your question in the chat box. Yes, so we have a question from Kamuzinzi. He's saying, mwaramutse neza nk'uko bisanzwe ndasaba CEO wa bank Dr. Diane inshamake y'imikorere mu rurimi rwacu bihita byorohera abatumva neza icyongereza. Murakoze.
Mwaramutse neza, murakoze Kamuzinzi kutwibutsa kuvuga mu rurimi rwacu. Nk'uko babivuze mu cyongereza, uyu munsi turerekana uko bank ndetse n'ibindi bigo bikubiye muri BK Group byakoze mu bihembwe bibiri bibanza uyu mwaka, nuvuga kugeza mu kwezi kwa gatandatu. Nk'uko byagaragaye, ibigo byose biri muri BK Group na bank byakomeje kunguka. Urwunguko rugeze kuri miliyari 36.9 kandi bigaragaza ko bank ndetse na BK Insurance Capital na Tech House bikora neza. Ibi byose biterwa n'ibintu byinshi, harimo uko bank igenda itanga inguzanyo n'izindi service ku baturage, ku bakiriya bayo na insurance. Ariko icyangombwa tushaka wenda kugaragaza uyu munsi nuko ubukererwe mu nguzanyo bugenda bugabanuka, byerekana ko abakiriya bacu bagenda bishyura uko babyiyemeje, bishyura neza inguzanyo babonye. Nicyo gituma bank yashoboye kunguka neza. Ikindi ni costs, amafaranga dukoresha mu mirimo yacu, uko byiyongera byagiye bigabanuka, byerekana ko bank ifite discipline ifite discipline na efficiency mu kazi bakora. Nibyo navuga, wenda sinzi niba Madame Beata yanyunganira.
We have a question from Antoinette Ford. He's asking, how is the capitalization level of the business? Any plans to source more capital?
Thank you. The business is very well capitalized. As it's seen, the capital adequacy ratio of the bank is over 21%. And the minimum is 15.25%. So you see we have a very good buffer. And this is due to the good performance that allows us to pay dividends, but also to reinvest in our business. And that's why we don't foresee in the medium term a need for us to go back to the market to raise more capital. Thank you.
Question from Juma. Is the cost to income ratio of 40% where you want it to be? Also in terms of lending during the first half, how much went to the SME sector?
Thank you, Juma, for the question. That cost to income ratio has reached our tolerance level. Usually we want to be, the maximum for us is 40%. So the objective is always to be slightly below 40%, but we believe 40% is still good when we look at, we benchmark ourselves with other financial institutions in the region. So we want it to be slightly below 40%, but we believe 40% is still an efficient, shows efficiency managing our operation. The other question was?
In terms of lending,
Yes.
during the first half, how much went to the SME sector?
So actually, when you look at the growth of our net loans, it's lower than the market at approximately 2% year on year. And this is because the bank has focused on two segments, which are SME and retail. This is really where we're focusing. Traditionally, we are a corporate bank, but we want to emphasize on SME and retail. That's why the growth of our loans is slower than the market. And we've also focused on deposit mobilization. We have very good success in collecting deposits, but deposits at an affordable cost. In this market, with interest rate rising, getting affordable deposits, I think, is a sport. And our teams have shown that they're able to get to collect affordable deposits. We expect to ramp up our corporate lending in the second half of the year because we have a couple of deals in the pipeline, because we don't want to lose market share. Maybe Anita has some more information on the growth of our SME segment, in particular corporate and retail, to provide more clarifications. Anita?
Yes, thanks, Diane. Maybe I don't have the exact figures, but we can share in terms of percentages. So as we saw overall, the portfolio, especially for the second quarter two of the year, 70% was went for retail. So the other, I think it's about 20 or so, was for SME. So maybe just to give some context on the ratios.
We have a question from Kelvin Majanga from BizWatch, Kenya. First question, what is the overall economic outlook for the second half of the year from BK's perspective?
Thank you, Kevin, for your question. I think globally, at the global level, the economic landscape still stays with some disruption of the supply chain. But when it comes to Rwanda, we have been witnessing a decrease of the inflation rate, which is following some of the confirmation from the central banks, as they kept managing closely the repo rate at the central bank and it was provided to the financial institutions. The exports still stay below the imports level, and we have seen a depreciation of Rwandan francs against the dollar. But we're also happy to see that for the specific sectors where the country is emphasizing has been yielding fruits, especially for the MICE strategy and the fact that Rwanda becomes a sports tourism place, which brings more businesses in the country. I've also seen for the transport sector opening new lines for the airlines. I think for those activities, it shows that the balance of being able to navigate in this economic performance for the group has been showing the resilience of our services.
Second question from Kelvin. Please give an overview of BK's performance relative to the industry.
Do we have it? The performance of the industry? No.
Thank you, Kelvin, for the question. Generally, I think we fare better than the industry, and when we say industry, we mean in Rwanda in particular. There's a slide, is there? Yes, so there's the second page of the document that you all received, shows growth in total assets at 2.8% versus the industry at 8.2%. And this, as I was saying, is due to the focus that the bank is taking on SME and retail. So we are not growing as fast as we used to. And I was also saying that in the second half, we'll ramp up our corporate business. In terms of client balances and deposits, we are growing faster, 9.2% year to date, versus 7.6% for the banking sector. Shareholders' equity also is growing faster for us than for the rest of the industry at 5.8% in the first half of this year, versus the banking industry at 2.7%. And there's nothing on profitability, but I know for a fact that BK Group has been traditionally more profitable than the rest of the industry. We can find the details maybe in offline for you to be able to compare how BK is faring vis-a-vis the industry. Thank you.
We have two questions from Shadrach. The first one, are the digitization efforts of recent years starting to reflect on performance?
Yes, absolutely. And this is, you can see it on two fronts. The first one is our fee income that is improving because we see more people using our payment facilities, our digital facilities to transact, and we charge a small fee there. And this is also allowing us to get volume without having people traveling to branches or without hiring more people. So that's one, fee income is improving. The second thing is our OPEX. We, for example, closed one branch in the first half of this year. We don't expect to close more branches, but the way we look at digitization is it enables us to get more clients, deliver more services to clients with the same number of people. So we've seen the bank growing in terms of client base, in terms of loans, deposits, etc., without having to increase our staff numbers. The staff numbers have remained for the whole group around 1,300, and this for the past couple of years. And that shows that we are being efficient in the way we do business, and that is also reflected in improved profitability year on year. Thank you.
The second question from Shadrach. Please comment on the NPLs portfolio.
Thank you, Shadrach. So our NPL portfolio is made of a couple of sectors. We have one sector which is the hospitality sector with some hotels, mainly tier 2 hotels that have not made it past the pandemic. They've not been able to revive their businesses after the pandemic. So this is a large portion of our NPL. We also have some NPLs in the real estate, mainly commercial real estate sector. That is also making the bulk of our NPLs. But generally, I think in our underwriting, I think our team have now experience and they've been very prudent in the way we underwrite and take on more loans. That's why if you look at a trend in the past probably 5 years and more, BK is now at the lowest NPL we've ever had with a 2.3%, which is better than the market average. So we'll continue doing that. We're also focusing on SME and retail. SMEs have traditionally a higher NPL rate. So we are telling our teams to be very prudent. As much as we have a lot of appetite for this segment, we want to write good loans because, again, competition is quite tight in the market and we cannot charge high interest rates. So when you don't have very high yields, you cannot afford to take more risk. So that's what we're doing. As you asked, mainly our NPL portfolio is into the hospitality sector and also in the commercial real estate sector. Thank you.
I have another question from Simon Kamuzinzi. Ese beka ntizongera urwunguko isaba abakiriya bifuza inguzanyo nyuma yaho BNR izamuriye repo rate kugera kuri 7.5%. Ubu inyungu yari kuri angahe? Niba muzazamura muzashyira kuri angahe?
Urakoze ku kibazo bajije Simoni. Ni byiza ko umuntu yasobanura neza iyo Central Bank yongereye repo rate ikashyira kuri 7.5%. Icyari kigamijwe cyane muri aya mezi akurikirana aho bagiye bakomeza kwizamura ko ari kugira ngo izamuka ry'ibiciro inflation ize kuba ikiri under control, ishobora gukurikiranwa ku buryo bwuzuye. Ibyo rero uko bagiye babikora ni nako tubasha kubona inyungu zabyo mu rwego rw'uko izamuka ry'ibiciro ryabashije kugenda rigabanuka. Nk'uko hari icyifuzo cy'uko impera za 2023 izamuka ry'igiciro ryaragarutse mu kigero gisanzwe kiri munsi y'8%. Ariko by'umwihariko twavuga ko ku bijyanye n'inguzanyo iyo izamuka ry'ibiciro bashije kugabanuka rigakumirwa bituma uwo ari wese ufite inguzanyo agira ubwisanzure mu kubyaza inyungu amafaranga yahawe. Navuga rero ku maherezo ku muntu ufata inguzanyo kandi ayikoresha bimugirira akamaro kuba ryazamuka ry'ibiciro ryabashije kuba ryagumye mu hipimo kiri hasi. Nicyo cyambere kiba kigamijwe kugira ngo kibashe kuba cyafasha abantu kudahendwa cyane mu byo bari gukoresha. Ku rwego rwa banke naho ni ibigenda bijyanye n'uburyo imihindagurikire y'ubukungu ikomeza kubaho. Ntekereza ko inguzanyo zigenda zitandukanye, and CEO Diane aza kongeraho details, ariko ni ngombwa kumenya ko muri uko kubumbatira iyo repo rate iyo batanzwe na Central Bank, uwa mbere ubigiramo inyungu ni wa muturage, ni wa undi wahawe inguzanyo, ubasha no gufata ya nguzanyo yari afite akayikoresha ibintu byinshi adahenzwe. Wenda nabona no gusubiza ko ntabwo tugombera kurebera muri reserves zacu cyangwa se mu mafaranga dufite twabitse ngo ari cyo duheraho tugena igiciro cy'inguzanyo, ahubwo tureba igiciro cy'amafaranga aboneka yo kugira ngo abashe gutanga inguzanyo, the cost of fund.
Murakoze Kamuzinzi, nk'uko twabigaragaje, nubwo bwose igiciro cy'amafaranga cyazamutse nk'igiciro cy'ibintu byose byinshi ku isoko, ariko nanone twebwe nka beka mwabonye ko ubukererwe bwagabanutse cyane, bugeze kuri 2.3%. Ni ibintu byiza rero bizatuma iyo abantu bishyura neza, ntabwo risk yiyongera, ku buryo byose tuzabishyira hamwe ku munzani tuvuge ngo wenda ntabwo ari ngombwa ko abakiriya bacu tubahenda mu nguzanyo kuko basige bitwara neza batwishyura ku gihe. Nibyo tuzakora. Niba ushaka kuza gufata inguzanyo kuri beka, karibu rwose, ntabwo tuzaguhenda, ntabwo tuzongera inyungu ku nguzanyo birenze uko byari bimeze. Murakoze.
Ikibazo cya kabiri cya Kamuzinzi: muri iyi minsi abayobozi ba beka bahuye na Perezida wa Repubulika, ese hari icyo mwizeza abanyarwanda cyaba kijyanye n'ibyo mwaganiriye?
Nibyo, mu minsi ishize twagize ikiganiro hamwe na nyakubahwa Perezida wa Repubulika, bitewe n'uko mu kwezi kwa gatanu hagiyeho umuyobozi mukuru w'inama y'ubutegetsi ya BK Group mushya, Jean-Philippe Prosper. Biba byiza rero yuko tuganira n'umukuru w'igihugu ku byerekeranye n'umurimo cyangwa se contribution icyo BK Group ikora mu Rwanda. Muri byinshi twaganire rero, birumvikanamo gukomeza kwaguka nk'ikigo, dutanga serivisi ku banyarwanda muri rusange ndetse no hanze yabo, no gukomeza kuba twagirira inyungu abafite imigabane muri beka. Harimo benshi b'abanyarwanda bageze kuri 54%, kugira ngo babashe kuba bagirana nabo izo nyungu ku ishoramari bakoze. Ku buryo bw'umwihariko ariko twanaganira uburyo beka Group nk'ikigo kinini ku isoko ry'u Rwanda dufata iya mbere mu mishinga ifitiye igihugu akamaro, tugafata iya mbere mu mishinga wenda abandi batinya kwinjiramo, ariko bitewe n'uko twifuza kugira ngo tugire uruhare rwacu mu iterambere ry'igihugu, tukaba twahagirira uruhare mu uburyo beka yagize uruhare mu bijyanye n'ikibuga cya Bugesera kiri kubakwa. Beka yagize uruhare mu gufasha mu ishoramari kujyanye no gutunganya stade y'igihugu y'i Remera. Ni bene iyo mishinga migari nayo nk'ikigo gifitwe mu migabane n'abanyarwanda benshi, twaganiriye uburyo bwo gukomeza gufata iya mbere kugira ngo iyo mishinga ikenera uwayinjiramo igamije kubatura ubukungu bw'igihugu, tube twahagira umuganda wacu. Muri rusange ndumva ari ibyo ngibyo byavuzwe kubyerekeye n'icyerekezo cya beka.
Thank you. So we don't have any more questions on the chat. I would like to invite Group CEO to give her closing remarks.
Thank you, Audrey. By closing, I think the most important is to confirm our commitment in driving the objectives of BK Group for the most interest of our stakeholders and our shareholders. I would also like to thank you for the trust, be it the media on the call, which keeps showing the interest on BK operations and businesses, be it our stakeholders and shareholders. where we see that we stay confident and excited for the opportunities which lies in the current period, the economic period. So thank you, and we wish you a happy day.